Good morning, everybody, and welcome again to another edition of Between the Lines Live. My name is Vanesa Rader. I'm the head of research at Ray Wyatt, and I'm joined today by someone that's been on the show a number of times now. So we've got Ian Hetherington. Thank you, Ian, for joining us.
Morning, everyone.
Ian is the director of RWC Capital Investments, so capital transactions. So thank you very, very much for being here. And I can't think of someone better to, just look back on the financial year as it was when it comes to commercial property. So we were just talking earlier, and Ian, how long have you been in commercial property for?
I need my calculator to answer this one accurately, but it's very depressing. It's 37 years.
Yeah, that's a long time.
Which just doesn't seem possible because I feel 21.
Oh, yes, and you look not a day over that too.
It's very kind.
But yeah, I was just also saying as well, like I remember pre-GST for my first foray in commercial property. So I think between the both of us, we have an too much experience on what happens in the commercial market. But so let's just get stuck in, I suppose, because it's been a really interesting 12 months. I had a look at some of those kind of transaction numbers for the last financial year and where we sit now compared to like the previous years. And looking at kind of the preliminary data, we look like across Australia, commercial transactions have amassed to about $56 billion. Well, that sounds like a really big number. Last year, we were over $60 billion. The previous year, we were a bit higher than that. And then there's obviously those COVID periods where we got over to like nearly $130 billion, which is a huge number. At the end of last year, I think we spoke at the end of last year, there was quite a lot of optimism in the market. We did see a few big transactions tick through, and that fourth quarter of 2024, we saw a real kind of spike in transaction activity, but that certainly has come back. It hasn't probably maintained. What are your thoughts?
I don't want to be too hard. Of course, uncertainty comes into that. When investors are anxious, they tend to sit on their hands. And I think that's probably the key theme of the market at the moment. People are going, well, there's uncertainty around the world, whether it be conflict, massive government changes and policies. So it's not really an easy space to have a high level of conviction when it comes to investing at the moment. And what's an appropriate return for the risk? I don't think that's as easy to analyse as when interest rates were zero and whatever you bought was an amazing deal 100%. Given interest rates were zero.
Yeah,
I think that explains why volumes are so different.
Yeah. Oh well, we don't expect it to get back up to those kind of abnormal
If interest rates go to zero again, we're in strife.
Yeah. Well, as you probably were, I was looking at some of those deals that were coming across my desk during that time, just kind of looking back on previous cycles and thinking, where does that sort of sit? But yeah, you're absolutely right. I think that the this holding pattern, if you like, we have kind of been in it for quite a number of years. There's been a few kind of changes and a few times where we've seen a bit of an uptick, but sentiment has been mixed. You just have to look at some of the consumer sentiment numbers. They're kind of down. That uncertainty, like you said, that's going along around the world. There's, every time you open the paper, there's another something else that's come on, and that's just done a lot to make people just, wait and see. And that trend certainly.
I think I caught a survey in the paper this morning where it said 43% of people surveyed out of 10,000 or something like that have less than $1,000 in the bank.
Yeah, and also just that cost of living pressure. That's not going away either. Yeah. We see the housing, all those kind of the housing results continue to be upwards. Places like Perth and Adelaide, places that have been once upon a time were more affordable, certainly getting up there, and it's a nationwide issue. But back to the commercial side of things, I want to start with office because I kind of like talking about office. And there is, there's optimism in the office market. It's been doing it tough for quite some time now. We have seen the corrections happen in terms of yield. So with interest rates, if you think there's going to be, a changing that might stimulate a little bit more activity in the marketplace. But we continue to have this issue of vacancies that have been reasonably high, the return to work situation in some states worse than others. So what's your thoughts on the office market? It's a big question. We did see a few big transactions. People are, happy to invest, different in every city. But what do you think is going on?
Sure. So I think there is more optimism towards office. It makes sense in the medium to long term that work patterns change. But we've been post-COVID now for a number of years. So it feels that where we're getting to now is probably going to be close to what normal looks like going forward. And we've seen people starting to stop. That's a silly way to put it, isn't it? But we're seeing the reduction in space and the talk, that was dominating the talk around office for so many years. That seems to be almost non-existent now. And it feels like we're maybe starting the new normal. So that's got to be a good thing for office. The key, the prime buildings, the core locations, vacancies are falling, rents are growing, and probably real rents are growing because incentives are starting to come down.
Yeah.
So that's probably, that's great. What does it mean for the secondary and fringe buildings? It probably means that recovery is going to be substantially longer because we need that ripple effect, as the core fills up, the pressure wave grows outwards. Another really positive thing for the office market is the bad news. And the bad news, it's just so expensive to build.
Yes.
So there's going to be very little new development. And if there is new development, the economic rent, which is an argument I hate because land can always be zero, but let's use it because it's easy. The economic rent to build a new product would be significantly higher than the current rents achieved.
Yeah.
So that should be a driver, a lack of new supply, and that economic rent should be a good positive sign for office going forward.
I also think positively for office is that we saw over the last few years now, a lot of businesses did relocate into kind of the premium end of town or the prime end or A grade kind of office facilities. And a lot of the time they actually condensed their space requirements. They took up smaller space, either more flexible space to allow from working from home or just to encourage people into the office. What are your thoughts of if we do have this kind of increase in people coming back into the office on a more regular basis, these floor plates that people did, or these leases people did sign up on a few years ago, which seemed appropriate for the time, maybe didn't allow for business growth, allow for more bums on seats. We're starting to see some of those tenants looking for expansion space, which may not be available in that existing building. Do you think that will stimulate more activity, more leasing activity, and in turn that vacancy down? That would make sense.
This happens every cycle.
Yeah.
People miss the really large tenants, the 100,000 metre, 50,000 metre users upwards. They always seem to underestimate or overestimate how much space they need, and this provides a massive swing factor in the vacancy rates in the market, and that just happens every cycle. So you'd expect the same is going to happen again.
Yeah, so that's the thing is like we're talking about people working from home. There's kind of, no, we need people to come back into the office. But if people come back to the office, realistically, there's not in all businesses actual space for them. So
that's right.
So we will continue to see some take up in that regard.
5 years ago, people wanted 3,000 metre floor plates. Oh, now there's going to be less people coming. It's 1,000 metre floor plates that we can subdivide. So these are just trends and just change. I really wish we'd go back to the 80s and bring back offices.
Offices around the perimeter
I love
the building.
I was too young to have one of those. I'd love one of those.
Oh, yeah. Well, yeah, that's taking up a whole lot of space that a number of people could be sitting in, though.
Yeah, but if you want people to come back to work, give them a space that they feel part of, not just a battery hen at a desk. And I'm surprised that hasn't been a trend that's come out of the post-COVID era, where you have a desk, you have your cactus, you have your family, your photo of your family and your own possessions and your space.
Yeah, so
I'm very surprised that hasn't come back.
Yeah, it's a good point, really, because it really has turned the other way. And yeah, but if you do want to get people back into the office, but the interesting part with that is if you look at some of the white-collar employment growth projections and you look at employment, we're actually it's not as positive as a lot of people would think. So I look at that and think, okay, well, existing staff, if you want to keep your job, if you want to get promoted in your life, you better kind of come back into the office, and that's, stimulating a little bit more activity in that space as well. But
well, if interest rate reductions suggest the economy isn't as strong as we'd like, what happens when a bit of fear comes back about your job?
Yeah.
Are we going to see that? Is that going to be one of the drivers that forces people back to the office? And that's not a new theme. I think we've been talking about that for probably 3 or 4 years.
Yeah.
But maybe now's that time.
Yeah. If you do look at those white-collar employment numbers, it would suggest that you really probably should be looking at that. But let's...
how do you get promoted if your boss has never met you?
Yeah. Yes, maybe.
It's pretty simple.
So Sydney's been doing pretty well. It's a standout story if you talk about the office market. We've seen a lot of offshore groups come and look at now as a good time to invest. If you wanted to buy a trophy Sydney asset, I suppose, if you can come to an agreement now is certainly probably a good time.
That's right. Yeah, and the market's been dominated by the offshore players. And we're about to see an enormous transaction go down with Grosvenor Place being bought with a large chunk of it by an offshore investor.
What country are these people coming from? Is it all over or?
UK.
Yeah, UK.
So that's a really good sign for the market. That's well in advance of circa $1.5 billion for 3/4 of that building. So that's a massive indicator for the market. But why is it that it's offshore and part? I think it's 50% Australian fund, 50% offshore. I'm not sure exactly what the final mix of that will be, but why is it that the local companies aren't recognising these opportunities and the offshore guys are? It's a question I guess we can't answer at the moment, but we're definitely seeing more people talking about getting set in office. Why isn't there more transactions? I think it's probably because of historic cost. People probably still trading at a valuation 20% below its peak, and people are reluctant to even 5 years on take a hit.
Yeah, that certainly does happen. And so in terms of other markets, I want to mention Melbourne, but I don't want to mention Melbourne. Obviously, a big office market. They have not had their vacancies stand out highest in the country. Yeah. That return to work has been much slower. Some taxation issues in that state as well. What are your thoughts on Melbourne as a investment?
I don't want to be too hard.
Like, you can see such opportunity there, but it's like those holding costs. Like, it's, one would think it's going to come good.
If the offshore guys are 50% of the market, and definitely more than that right now, but, typically 50% of the market, and they're not there because of tax,
yes,
it makes it very hard.
Yeah, of course.
And what's the urgency? I see value in Melbourne. I want to get set. The fundamentals will return. Australia's second largest city. But what's the urgency?
Yeah.
So how do you create urgency? I'm going to focus on Sydney. I'm going to focus on Brisbane. I'll come back to Melbourne later because nothing's going to change there quickly. So if you wanted to, if you think about Melbourne, it's great and it will come back. It always does. That's why we call it a cycle. But what's the urgency?
Yeah. Or you just have to bear those kind of costs. Yep. So the longer you can kind of push that out, the better, I suppose.
Yeah.
And Brisbane, it's nice to hear Brisbane now in the mix when we talk about office markets. Historically, it has been very much the third city, but by some distance. But now it's sitting there at number 2 as a place to invest.
Yeah, and in some people's eyes, number 1.
Yeah.
I think for the big offshore guys that haven't invested heavily in Australia before, the gateway city is still number 1. So Sydney, Melbourne, as we just discussed, not in the frame. But if you've had a long history of investing in Australia, offshore buyers will be active in Brisbane as well as the local guys. And again, that's because of supply. So again, that message that the bad news is the good news. It's hard enough to get a building built there at the moment.
100%.
Wait till the Olympics and the other hospitals and things come on.
Yes.
So not only is it cost, it's time. And it takes an enormous amount of time.
The efficiencies today are very different to they were in the past.
It's almost like we're heading back to the 1980s and 70s in terms of construction. Not as bad, but that seems to be the direction we're heading. No longer can you say that a building will be up and done in 3 years. Yeah. It's significantly longer than that.
That's right. And so, when you come back to that economic rent argument, like you have to have to build a new building these days, an office building, there's got to be a pretty compelling story when it comes to economic rent and who's going to really pay that. So, but that for the rest of the market, though, that will see, that vacancy continue to contract. And interesting time. Queensland, particularly given the huge investment in infrastructure there and the Olympics coming up, like you said. Also already we've seen in places like Sydney, the skills move up to Queensland and that's not an issue.
Beautiful one day, perfect the next.
Okay, maybe we're too old. We understand that, but maybe not all our audience do.
Yeah.
But
so Brisbane's actually looking pretty good.
Yeah, it is looking good. I rate Brisbane in terms of office take up and things like that. That's moving ahead of all the other markets as well. So,
and it's not like in Sydney where you had 3 or 4 CBDs. There's really one in the valley, so there's limited opportunity for another market to emerge out of nowhere.
Yeah, and then there's Gold Coast, but that's kind of a different sort of market, which is doing very, very well.
Unbelievably well, yeah.
But again, that's supply constraints in that market, cost of supply as well, making it quite difficult. And I do want to move on from office, but you did mention like other CBDs. So here in Sydney, we obviously have the issues of North Sydney or North Shore markets and also Parramatta doing it tough.
Yeah, they are. And there's some supply in North Sydney, and we had a huge
beautiful buildings though. They've got some beautiful assets up there in North Sydney now.
Yeah. So that a lot of those daggy old buildings are getting replaced, which makes it more desirable.
Mm-hmm. The metro going right through there.
Metro is amazing. I've never heard grown men talk about trains.
The metro is amazing.
So much. It's boring. Can we stop talking about Thomas the Tank Engine? So look, North Sydney, I think is going to benefit enormously from the change in Macquarie Park.
Yes.
That's going to be a real driver for North Shore markets.
Mm-hmm.
It seems like every day there's more supply being withdrawn from Macquarie Park as it gets converted to residential.
Yes.
And why not? That makes a lot of sense given the pressures we've got.
Yes.
You've got trains, you've got shopping.
Yes.
You're close to everything. So, let's go. Let's make Macquarie Park a really nice residential suburb.
Yeah. And the office that's there has always historically been that campus style, kind of low-rise, big footprint.
Yeah. So maybe that means that we've got to change some of the buildings to get built. Or they just have to adapt to being in more high-rise buildings. And I guess that will also have a ripple effect into Parramatta.
Well, the metro is going to be there soon enough.
And, like Parramatta's cyclical and we're just going through a normal cycle out there.
And again, beautiful buildings in Parramatta too. Yeah. They're Parramatta Square, but, that secondary is very secondary in that market. So we'll just have to wait and see.
Yeah, what Lang Walker did out there is just phenomenal.
Oh, it's like they're outstanding.
Yeah.
Okay, so office, interesting, but retail, I've been talking retail up for the last 12 months now, and looking again at the volumes, we have seen an awful lot of, like a real uptick in terms of transaction activity for retail, for all different types of retail, from that kind of small neighbourhood through to the large regional, super regional shopping centres. Thoughts on retail?
It's been the shining light, hasn't it? And I guess there's a lot of factors, but if we go back, historically, it went through that pain where yields adjusted following the fears about e-tailing and
so well before COVID and the concerns there, where it was already in that kind of correction pattern, if you like.
Fully into the correction pattern. So the yields there have looked attractive for a long time, and of course the fundamentals are still the same. Very few new centres are being built. In most locations, you can't build new ones. And we've got this population growth, which is extraordinary. So the fundamentals for retail look good.
And you don't think everyone's just going to never go to a shopping centre again and just do all their online shopping like the fears were? Retail is here to stay?
Yeah, well, I go shopping about once every 3 years. So I'm probably not the best person to ask. But I think as an entertainment hub,
they're just going to look different.
It's just going to look different and keep adapting. And I think we always are way too binary in our thinking, and often we just get stuck in our ways, and things adjust, and just give it time, and new trends emerge, and new opportunities present themselves, and people get used to doing different things. So that just takes time. But if you just think about those key things of the yields are more attractive than they used to be, very limited new supply and population growth, it's probably not too hard to say, gee, retail looks okay.
And you're right with the different types of uses that we'll see there. Like I think really high quality food, like really kind of funky places to go and eat will become, I don't think it'll be just like food court. I think there'll be kind of elevated food offerings, and not just kind of like a movie theatre, but other sort of fun things for people to do. Yeah,
and the entertainment angle. It's just escaping me now, but there's this most incredible place in Tokyo.
Yeah.
Which is, where you can holographs and the way you entertain and all those things. I mean, the opportunity for that here is probably pretty substantial.
And leaning into all the social media trends and stuff, like that's not my thing at all. However, I can appreciate that is something that people, they want the experience, they want to be able to interact both like online, but then do it in person.
Yeah.
And we've seen that there's a centre nearby to where I live. They've actually put in like a community facility in there, but they have podcast studios, they have green rooms, they have music studios that you can just hire, but it's part of the shopping centre, which shows that kind of that local demographic that want to kind of use those. That's not a retail use, do you know what I mean? Like, but
no,
maybe
right.
it is. Maybe it is now. It's the different sort of kind of using that space for something different other than the traditional retail. So it will continue to evolve and continue to adapt.
And we still haven't got it right yet, because sometimes the engineering and the building costs are prohibitive, or the ability to expand or change the centre as it's required. But living above shopping centres, aged care, access to facilities, all those things, generally in good locations near transport, that's a trend. There's got to be a solution for that sooner or later. And I think, so maybe not all your growth is going to come purely out of retailing. It's going to come out of other uses that are very important as well.
Yeah, for sure. And if you look at New South Wales government with their TOD, transport orientated development, which is, you mentioned Tokyo, they do it really well there, where it's that precinct where you do that whole, it's really authentically you live, work and play, access to transport is right there. That just has to be where we kind of move to, because they're a requirement for housing and stuff as well.
Yeah, and in this day and age, who's going to travel an hour and a half to get to work every day?
Yeah.
You're going to get sick of that pretty soon.
So
there's too many other good things to do.
So historically, that big retail side of town was always, a handful of groups that just kind of shuffled the assets around. Is that still the case, or are we seeing kind of new players emerge?
Yeah, it's fascinating, because the transfer from the traditional players to new players has been massive. And a lot of it is what we used to call in the 80s syndicators. Phenomenal. And we used to think of them being, say, up to 100 mil, 150 mil. I think we've seen deals this year over 500 million. So that transfer, I think that'll continue from, the traditional big owners into these smaller, more nimble groups who will back themselves to make a difference. Yeah.
Oh, and they certainly see opportunity in this retail asset class.
Yeah. And it's something that's an easy sell to mum and dad investors to self-managed super, because everyone understands shopping and the need to it.
Yes.
Yeah.
Let's go to industrial. There's so much more that we can talk about, but let's end on industrial, because that's obviously been the asset class of, most interest, I suppose, over a number of years now. We've got the other side of the e-commerce, and we've got the lack of available land, serviced land across the country, to be honest. It's not just a Sydney or Brisbane story. Melbourne, maybe there is a bit more land, but we'll move on from Melbourne. But what's your thoughts on industrial? We saw volumes come down a little bit, but they certainly have popped up again, and they have quite a large component of transactions over the last 12 months. Industrial, here to stay?
Here to stay. Still very strong demand. Institutional demand, very strong. I was talking to a fund manager the other day, and they probably have, I don't know exactly, but let's say they've got $1.5 billion worth of sheds. They've got unsolicited offers on around 600 million of that at the moment.
Wow.
So I think that's a good example of the liquidity that's there for sheds. Interest rates, sure, that helps, but also too is again, it's this two-sided coin, two sides of every coin. Interest rates down, so your debt costs look better, so your returns are enhanced, but does that mean that demand for warehousing is going to slow because the economy is slowing? But I think on balance, I'd imagine that the industrial market's going to continue to stay strong, and you may even see yields tighten in the short to medium term.
You're right with that, though, because we do have the issue where vacancies are up around the country, although they are still remain very, very low. So that just means that kind of rental growth is, that's really settled down now.
Yeah.
So interesting.
And there's still so many players that aren't set.
Yes. There's little opportunity. And then if you do develop, back to that whole economic cost again, the cost of construction, while they're more maybe affordable properties to try to build in comparison to an office building. But certainly an interesting time for industrial. And who are the players that are in industrial? Is it your kind of traditional funds that you've got, or are we seeing offshore investment into that?
Offshore investors through smaller platforms.
Wow.
And you think, oh, they're new. oh, hang on, they've got 2 billion under management. And so it is very dynamic. And you just think, yeah, the fundamental for sheds looks strong. Again, urban renewal is a big thing where because of the population growth, we need to change the nature of use. So I think we'll continue to see a lot of industrial land in east of Parramatta absorbed, which just gets moved out further west into the new areas. So that growth will continue.
Yeah. And that airport.
And the airport's going to be amazing.
It's going to be amazing. See a lot of servicing issues, though, with some of the land out there, but we'll get there.
Yeah, and look, why are we surprised? It takes, they're big projects, takes a long time. Sure, it's frustrating. It's artificially pushing up returns in many ways, but you would think that the timescales and lead times on these projects are so long that it won't create a cliff where the market drops off. I think the market growth will be in line with when the services come online. Fair
enough. We're pretty much out of time now, but I just want to ask one quick thing before we wrap up, and it's what's the opportunity? We've got to ask a question. I think we've mentioned what they are throughout this whole kind of chat, but where do you see kind of the greatest opportunity for the next 12 months?
I think probably office. Put me on the spot here. I hadn't thought about it.
Sorry, I didn't tell you I was going to ask.
No, that's all right.
Melbourne office, Mark.
I'll just buy some time. Look, theoretically, it should be Melbourne.
Yeah.
But again, if I've got to spend the money, say, before Christmas, it's probably not going to be Melbourne. I'm probably going to say low A grade, B grade in the core of the Sydney CBD, and anything with a 3 to 4 year WALE that's got a reasonable neighbours rating in Brisbane.
Well, look at you. That was actually a very detailed answer. We didn't even talk about ESG, but that's probably a discussion for another time. But that's certainly going to be, for all of these asset classes, a growing kind of need. But anyway, enough about that. Thank you very much, Ian, for coming and chatting to us about where we've been the last 12 months and some ideas of opportunities looking ahead. But thank you very, very much. Interesting times for the commercial property market across Australia. So thank you. Thanks again.
Great. And thanks to everyone. I hope you have a great day.
Thank you. And thanks again for everybody for tuning in to another one of these Between the Lines live webinars. As always, this is available to watch on YouTube afterwards, and also on Spotify, the podcast version of this. So it was great to have you. And next month, I've actually got a revisit of the one that we had earlier this year, which everyone was crying out to have Peter Vines and also Dom Lacerdo from Stanford Capital back on. So we'll be talking about probably the year ahead after the financial year as well. So stay tuned for that. So thanks everyone, and we'll see you next time.